Could political uncertainty at home threaten the UK's healthy growth? Alfie Stirling joins me down the line to discuss. Alfie, services PMI in the United Kingdom increased to 58.60, pointing to a robust recovery. But strong growth has so far failed to translate into strong income tax receipts due to the shifting nature of the jobs market. Is it too early for the UK to breathe a sigh of relief just yet?
Yeah, I think it is too early, and I think the nature of the recovery is also a little disconcerting. I mean, as you alluded to, jobs growth has mainly been in the service sectors, as well as in care work, and therefore, it's largely been fueled by increases in self-employment and part-time work, particularly on low salaries. So an example of that is self-employment has gone up 700,000 since 2008, but average earnings for the self-employed are actually down 22%. So overall, real incomes have been declining, so household debt has had to start rising again to sustain consumption levels. And this means that while revenues from consumption taxes have remained strong, we've not seen a rise in income tax revenues despite the return to economic growth, as you mentioned. And I think the fact that we're seeing a rising household debt means we should be very careful about what we're wishing for, if the aim is to return to business as usual.
Today we have the autumn statement in what could be Osborne's last chance to shine or not ahead of next year's elections. GDP forecast has been revised upwards, but what are investors and businesses hoping for?
I think basically investors and business want to see a sustained recovery going into the next Parliament. I mean, small businesses may well be looking to the Chancellor, George Osborne, to tighten rules on corporation tax for larger firms, and may also welcome a review of the business rates that's been suggested. But businesses are likely to also note some of the broader dangers of today's announcements to the economy as a whole, insofar as we may be seeing too many cuts that really are coming too soon. The headline cuts to resource spending by departments imply that we could be looking at cuts in some departments of between 50–65%. And returning to cuts of this magnitude in the next Parliament could risk putting the recovery we have seen over the last couple of years in jeopardy. And we saw this was the case in the first half of the current Parliament.
IPPR have recently said sticking to an eggs-all-in-one-basket approach would make the UK increasingly vulnerable and unable to increase its share in global markets. Could the UK really be the makers of their own downfall?
Yeah, I mean, government policies and decisions can be absolutely key to the types of exports that the country can develop. The focus at the moment on services for exports, basically, especially finance services, has contributed to an erosion of capabilities across a wide range of manufacturing. This basically means we have a lack of diversity in our exports. We can see that that kind of model of export really isn't working. Over the last 30 straight years, we haven't seen a surplus in the UK's trade current accounts. So we can see that model of a lack of diversity and picking, and kind of helping very few winners really isn't working. The UK needs to develop new export strengths, really, in areas that we already have a comparative advantage. For example, the UK has a comparative advantage in large areas of car manufacturing. So we should be looking to translate those advantages into the markets of the future, such as ultra-low emission vehicles and electric vehicles.
The composite PMI helped take euro sterling down, but pound dollar is heading towards the bottom of its 148 to 152 range over time. Tomorrow we have the MPC meeting. Do you feel the markets are expecting anything new from there, or is it already priced in?
I don't think we'll see anything new. I mean, falling oil prices have helped bring inflation down towards that bottom end of the target range, or if not below the actual target. And Mark Carney, the Governor of the Bank of England, has even talked about possibility of inflation falling below 1%. So we'll probably get 2 of the 9 MPC members voting to increase interest rates, as they have in the past. But the remaining 7, I think, are unlikely to change. We certainly don't expect them to change their vote. The argument that they'll put forward is that the global recovery over the short to medium term is far from certain, and the Prime Minister, David Cameron, recently pointed to what he called, red lights on the global economy. So their view will be that it's better to defer decisions on raising UK interest rates until the health of the global economy is more secure.
Alfie, great to speak with you. Thank you so much for your time. Viewers, remember to keep track on Sterling's latest movements by clicking back for our early updates. For me and for now though, it's goodbye.